We have Gaurang Shah, Senior Vice President, Geojit Financial, now joining us on this broadcast. Gaurang, thank you so much for taking time out to be with us. I'm going to begin by asking, there was an expectation that the Indian markets are going to have a good day today because of how Wall Street closed based on those softer than expected US jobs report, and that triggered again speculation that there could be rate cut or even rate cuts from the US Federal Reserve going forward. How do you read the signs on the street at this point, Gaurang?
Thank you very much for having me on the show and morning to all of you also. Other than the Fed chair, everybody else is speaking about the timeline and the quantum of rate cut in the US. I think it is very clearly said in the comments by the Fed chair last time that everything will depend upon data. And if the data indicates accordingly, the Fed chair is going to act in terms of rate cuts or status quo or otherwise. So I think rather than jumping the gun, let the Fed chair decide upon its wisdom and thinking as to when they will cut the rates. Let us not be the Fed chair and start jumping over. And honestly speaking, I think, from last year itself, this is known to us. I don't think that Indian markets are going to react majorly, whichever way the Fed chair is going to decide. We have done and dusted and discounted that particular event. So, I mean, and for me, I think for us, it would be more prudent to look at what RBI and the MPC have to say and what is the overall view as far as the rate cuts in India is concerned, rather than worrying about what US and the Fed chair is going to do. Having said that, last week we were in the discussion with Suyesh this Monday morning itself last week, and we had expressed that we are witnessing a little bit of fatigue on the screen, expect a little pullback. And that's what exactly happened throughout the week. Last week, it was range-bound trade. On Friday, we made an all-time high and then a sell-off, which got aggravated. But the good part is that the sell-off was nothing big to speak about. It was less than 1% correction on the Sensex and Nifty. We expect similar kind of trend this week, but it is going to be more stock-specific on the Q4 earnings unfolding.
All right, so you're saying that what's going to happen in the markets right now is going to be stock specific based on earnings. And talking about earnings, Amit, let's begin with Godrej Consumer. What say?
Godrej Consumer is likely to announce their earnings today. Gaurang, I'll take two Godrej companies. Godrej Consumer has been an outperformer in the pack. They've done better than Dabur, Emami, even Bajaj Consumer. Their stock is marginally up, though last 5 days it has been up. Is it because of the bifurcation, or is it really that the stock is doing well on itself?
So I think pipes of peace have been smoked and the resolution is in place as far as the difference of opinion, I will put it that way, between the stakeholders, and resolution coming through is not only good for the future of the company and its employee, but also for the stakeholders. Having said that, since we are speaking about Godrej Consumer Products, I think it will be prudent on my part to give a disclosure that we have a fundamental coverage as far as Godrej Consumer Products are concerned. And the entire FMCG basket, we believe that post the election is done and dusted and the government in place post 5th of June, I think you are going to see a lot of policies unfold, especially for semi-urban, rural India, agri-related activities, which will push the demand for the, which will push the income level for this part of India. And I think that's where you will see a huge amount of support coming in terms of volume growth. And input cost, which was a concern, is also a thing of the past. So I think not only for Godrej Consumer, but all those companies which are in that Godrej Group universe, I think it's good sign for all those companies.
Talking about the Godrej universe, now Godrej Properties has announced that it is going to launch projects worth 30,000 crores to achieve 20% growth in sales bookings over the next 1 year. Their stock has gone up almost 7%, up is almost 7% today. What do you make of Godrej Properties? A rally round the corner?
Well, I think that well, on the fundamental side, Amit, honestly, we have coverage over there. We had a buy coverage earlier, but now with the target price in place and the kind of rally that you rightly mentioned on the counter, not only on Godrej, you look at the strong names as far as the real estate sector is concerned, be it Godrej Properties, be it DLF, be it Oberoi Realty, be it Shobha Limited, or be it any other name, established player I'm talking about. you've seen a good rally. So, on Godrej Properties, we have a reduced stroke book profits recommendation, given the kind of price levels that we are witnessing. And yes, you are absolutely right. I think this particular announcement is by and large in a large city like Mumbai, if I'm not mistaken. And in and around the central suburban India, suburban Mumbai, there are a lot of projects that Godrej Property is going to execute and possibly put up for sale in the next year or two. I expect the entire real estate pack to do well, but on Godrej Properties, we have a book profit stroke reduced recommendation.
Another company I would like to pick your brains on, sector itself, CG Power. Now they have been making big moves, but the stock itself is down today. They're due to announce their results today. Their stock over the last 1 year has done pretty well at 75% gains. Today it is down. What do you make of this sector and CG Power itself? They are going into new sectors as they have announced over the last few months.
I think you are picking all those names which we have a sell recommendation now, Amit. We had a buy recommendation on CG Power and Industrial, but since our target is in place, I think it's prudent to take some money off the table. And remember one thing, Amit, I think chasing your profits without any limits is going to turn out to be very dangerous in terms of, expecting more and more. As you rightly mentioned, in the last 6 months or 3 to 6 months, the stock has rallied to a great extent on fallback of the announcement that we've seen in terms of the opportunity that lies ahead for a company like CG Power. But we absolutely believe that the capital goods engineering electronics segment is going to do well. But there is going to be limitation in terms of earnings and pricing. So we believe that on fallback of earnings, it is fully priced. We have a sell recommendation on CG Power currently.
All right, so sell recommendation on CG Power is the word coming in from Gaurang. Shah, Gaurang, we're going to keep it stock specific as you've been talking about. We finished up all the earnings over here and the earnings to come out. Let's talk about a stock like Paytm. Huge management reshuffle, the COO resigning, citing personal reasons, but will be looking to stay on in an advisory capacity. But meanwhile, new CEO appointment for Paytm Money, new appointments. There is a lot of churn that's going on with Paytm. How do you see the stock? There you go, Bhavesh Gupta stepping on as COO. He's going to transition into an advisory role. Meanwhile, Rakesh Singh takes over as well. All of this happening starting from the 31st of May, which means that by the end of this month we'll have a brand new management in place for Paytm Money and the financial services business as well. I want to understand, how do you view the stock from here on?
Well, so I think on Paytm also we have a reduced recommendation, to be very honest. And this reduced recommendation came in last year, somewhere November. We had given a reduced recommendation, and I think earlier this year, some couple of months back, we had the news flow in terms of the action that was taken by Reserve Bank of India. Post that, the history is known to all of us. And then, of course, the news flow in terms of high-level resignations coming in. We don't have clarity in terms of what business model the company is going to follow. I think, when you have a stock or a company which is surrounded by news flows on the negative side, it is always prudent to look at other alternative ideas. Currently, we have a reduced recommendation as far as Paytm is concerned.
Gaurang, at this stage, I want to help the viewers understand what the markets are going to be like going forward, because bear in mind, in less than a month's time from now, the results of the ongoing elections, general elections in India, will be out on the 4th of June. There's also talk of a post-poll correction, which is a possibility. You've already been talking about how there is some wariness, some tiredness on the screens already, and all the cues for the next few weeks are going to be stock specific. But help put the markets into perspective. How is a retail investor supposed to approach markets the way Sensex and Nifty are trading at this point in time?
Well, honestly, I think the way VIX is behaving since last week, 10 days, is giving you indication as to what you can expect from the markets. Historically speaking, month of May has been a May wherein you see a lot of choppiness, volatility, and by and large a downward move. We have approached the month of May with a big event, and that is second largest phase of election post independent India. Along with that, we have Q4 earnings unfolding, and along with that, you have a little bit of uncertainty as far as the Middle East situation is concerned and its impact on the crude oil prices. We have given a broad range for this week, if you ask me, 22,350, 22,450 on the lower side, 22,650, 22,750 on the higher side. And like I mentioned last week, was when I was in conversation with Amit and Suyash on this very show, I had mentioned that it will be prudent to expect a little bit of pullback given the kind of elevated levels that we've seen. And not surprising, after last week, Friday, all-time new high, we've seen a pullback. This can possibly be the order of the day and for the week. Political news flow and comments from various political parties and leaders would be in the spotlight, and markets would react accordingly depending upon which way the comments are. But one has to prepare to fasten the seat belts and expect some choppiness and volatility. I think if you see a decent correction on the downside, not really large enough, but consolidation and range-bound downward move, then post-election expect a little bit of positivity. Not to forget, you will possibly have the full-fledged budget also unfolding. That's what the Honorable Finance Minister and the Prime Minister have mentioned, which might act as a tailwind positive for the markets.
Gaurang, I'd like to pick your brains. We have talked about gold prices internationally, geopolitical situations. There's one event that went slightly under the radar. Now, yen hit its lowest in last 34 years. How does that augur for carry trades as far as INR is concerned? Now, carry trades, INR has low interest, yen is a high interest currency. Do you think the Indian rupee is said to be affected, and the carry trade strategies for those trading in Indian rupees is said to be adversely affected with this event?
I think it will take a short to medium term impact on the INR with the events unfolding, but I don't think it's going to, and you might have some kind of flows flying back to safety in this kind of a scenario as far as FI activity is concerned. But I don't think it's going to be a prolonged long-term damage which is going to be irreparable. It's short to medium term, you can expect some impact and volatility.
Short to medium term, we can expect volatility. But talk to us about how, you're talking about crude and, going forward, how do you see the crude situation panning out? It's finally back up. Brent crude is back up. But the tensions continue unabated in West Asia, and then you see what's happening with the US bond yields and the dollar index. How do you see these global cues impacting markets in India, if at all?
I would say there is rather too much of noise as far as the crude oil prices are concerned. I'll just push you down to maybe about 2.5 years back or 2 years back when Ukraine-Russia crisis started unfolding. Everybody on the street was jumping and shouting from the roof that crude oil will go to $150 a barrel. It didn't even cross $100, to be very honest. Then you had the unfortunate event last year in October with respect to Hamas and Israel. Again, you started hearing that the crude oil prices will jump to $150. Once again, it did not cross $100. And then you had Iran jumping into this particular situation as far as Middle East is concerned. And very recently also, we started hearing on the street that crude oil is going to go to 150. Well, we are much below that, to be very honest. Brent is below $85 a barrel as we speak. And somewhere close to about $78 or $79 a barrel is NYMEX. And more importantly, our energy requirements are secured in terms of rupee-dominated trade with Russia. I hope that wisdom prevails upon the leaders of all those countries in the Middle East and the situation de-escalates and a dialogue takes place rather than throwing missiles and drones at each other. The crude oil prices will be totally depend upon the situation. And unfortunately, the sad part of the entire situation is that nobody can predict what is going to happen as far as Middle East is concerned and which way the crude oil prices are going to go. So let's hope wisdom prevails and crude oil prices tend lower.
Okay, let's hope wisdom prevails. But Gaurang, at this stage, again, I'm speaking from the point of view of the retail investor. Any particular sectors that they can, target, when it comes to their investment journey, and also, so far the talk has been so much about the mid cap and the small cap, and then of course talk about the froth in the mid cap and the small cap as well. So talk to us from the point of view of both the sectors. There you go on your screens. There's Nifty Bank up in the green, Nifty IT up in the green, Auto in the green, FMCG and Pharma all trading marginally in the green, whereas metals are down in the red. PSU Bank down over 2.5%. Realty up in the green. Nifty Private Banks up in the green. Media marginally in the red. Gaurang, first up sectors, and then talk to us large cap, mid cap, small cap. What should the retail investor target?
Well, so sectorally, honestly, on the fundamental side, I believe there are certain sectors which will do extremely well, especially with the banking and finance. So you have public sector, private sector, strong banks, strong NBFCs. NBFCs can be classified into microfinance, small finance banks, housing finance companies, and diversified finance companies. So that's going to be the first priority. Second will be autos. Third would be cement. Fourth would be defense-related companies, both private as well as government-owned companies. And in the similar manner, both government and private companies related to railways, power generation, power transmission, power equipment, power finance companies, and infrastructure companies. So by and large, I think that's going to be a list of about 6 to 7 odd sectors that investors should look at investing and buy quality stocks. Don't go in for lesser known stocks with single digit, double digit pricing. You may end up burning yourself and losing your capital. Small and mid cap universe, the second question that you asked me, I think, you can't expect to park your money in any company that you see on the screen and expect to make 15-20% return. You need to be extremely, extremely stock specific. You need to put the name under the magnifying glass or a microscope to understand what that company is doing and then possibly go and invest money in that. After understanding what that company is doing, and let me say this, there is going to be elevated risk as far as small and mid cap is concerned. So if you don't understand too much in the market, just go with the large cap and stay invested.
Okay, just go with the large cap and stay invested is the word coming in from Gaurang, Shah, Senior Vice President, Geojit Financial. Gaurang, thank you so much for taking time out to be with us here on this edition of First Take.